Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, April the 16th, 2013. We're going to be looking at gold, oil, and silver today. Starting off with silver, and I'm going to kind of try to explain it for you. I know a lot of people out there have been watching the gold market's been falling substantially. Silver, of course, tracks it. And there's been some speculation as to what's causing it because no one really knows, and so that's something I read today. They're just talking about no one really knows. But one theory came out, and that was that maybe there was a whale trader caught in there, basically referring to the J.P. Morgan whale trade that happened, blew up in their face, and they had to dump a whole bunch of stuff, and it landed poorly on the chart, of course, because you have great sell pressure that's going to supersede buy pressure and have a massive crash. So when you're looking at silver or gold, and I'll show you the gold in a moment, they're looking at this massive selling here and here, and they're saying, well, maybe just somebody, some hedge fund or something of that nature, got caught on the wrong side of the trade, and they were forced to sell, and that's what caused that. It's just a short-term blip that's on the radar, and we're going to bounce away from that, and it'll be over, and we won't have to worry about you should be buying this. Well, that's one theory, and as another trader talked about it, they mentioned it. They thought that was just wishful thinking, and I'd have to agree with that, and I'll show you why. Looking here, you can see that I don't see a hammer candlestick formation here. Someone else may consider that to be a hammer. It's not. A hammer candlestick has to have a body, or a wick actually protruding from the body at the bottom side that is 2 to 3 times larger than the body. That's not the case that we have here, so it's not a true hammer candlestick formation. So all I see here is a bounce, and it makes sense because the ultimate oscillator would pull back down below the 30 line, which is where you typically get your bounces. And so that idea at the 30 line or below it, where you find a bounce, makes a lot of sense. Here you had one. And here it looks like you're setting up one after you have a massive sell-off here. Here you had one as well. Here as well. Okay, a bounce is just a bounce. You shouldn't be thinking that, oh, now I have to get in or I'm going to miss it. Somebody else could have thought the same thing here, here. This is just another bounce because you have a high point here, low point here, lower high here, lower low here, lower high, well, let's see, 29 right here, and then we have a lower one here. It just kind of takes some time, and then we get lower low, lower high. All we're doing here is a downtrend. So no reason to try to catch a falling knife and go out there and buy this thing. Wait for the trend to change because your trend may be changing a very long time from now. That's why you don't attempt to buy bottoms, catch falling knives. It's very dangerous. Let's look at gold and see if we get confirmation. Okay, here we are looking at the gold chart. Basically the exact same identical condition here. You have a low high, lower low, lower high, lower low. Actually, it forms over here, and then there's this number here. And so all we're doing here is bouncing off these little short-term blips that are just bounces in an overall downtrend. So again, would I buy this? Not a chance. Is the wick 2 to 3 times longer than the body here? No, it's not a hammer. So I would just simply watch this bounce and look for a new short entry opportunity. Where would I get short? Roughly the 70 line. In a bear market, you won't actually hit the 70 line. You'll hit about the 60 line, which is what you're seeing here, here, here. Okay, so that's something that you should take into account as well. Whenever I see a bounce here, I'm looking for the same things always. I'm looking for previous support that's broken down, looking for resistance at that level, looking for resistance at the middle Bollinger Band line, which you saw right here, and then also at the 50 line, of course. So in this scenario, when we're looking at this, I would see this as a very bearish scenario, looking for a bounce, and then asking yourself, what is it telling you about the markets overall? And I'll show you that in a moment. Before we look at the third chart, I want to point out again, this is the argument that maybe this is simply just a hedge fund or something of that nature that got caught and they had to sell, and that was a short-term blip that we're going to bounce away from it and go into a great bull market. Some arguments with that would be, of course, what was all of this? Also, the fact that we know that Cyprus had came out and said that they thought they were going to sell some gold in order to cover some or raise some money so they could get their bailout. That was quickly countered. I think it was like the next day they said, well, maybe we won't do that. The reality is you wouldn't want to tell anybody you were going to do that beforehand because then everybody would sell it and you get a lower price. So of course they're going to come out and tell you, no, never mind, we're not going to do that. And then later they'll announce, guess what, we did. So I think actually it's more telling in the fact that you have not a hedge fund that maybe have got a margin call, but actually peripheral countries in Europe who are struggling financially and they're trying to raise money. I think that's more likely, but I think it bodes poorly for the overall economy, and I'll prove that in a minute. Taking a moment now to look at the XOI oil index, and this one has a very clearly defined hammer formation right here, And so that I can see somebody saying, oh, okay, that's much better. Looks a lot like this one here. We bounced off of that. It makes perfect sense. Again, remember, a bounce is just a bounce, not necessarily a change in trend. Up here, we had high point, sold off, bounced off of this 50-point line here, and we bounce up here to test the previous high, and we fail, and then we go lower. See, we get a lower close than we had before. So again, what you're seeing here is not a whale trade situation in gold, but actually you're seeing oil and gold signal something to you, and something about the economy, telling you that the economy is not in the condition that people say it is. And you have, I believe, peripheral countries that are selling gold because they need to raise money because the problem is getting out of hand. And I mean, they wouldn't sell the gold unless they had to. So that's basically my theory here. On the argument of the whale trade, what was this? Was there also whale here, here, here? We have a whole pod of whales now. Is that what this is? No, I don't think so. Let's look now at gold and show you what I'm seeing for the economy. Before I move on, let me repeat myself, just to make sure. If you're out there and you're looking at this, saying, okay, I'm going to buy this. If we get a confirmation 1 cent higher than the next day with a stop right here, you can do that. I understand that concept, but you're counter trend trading, and that means that the odds of your success are lower. You do have a gap between this close here and then this high point here, so that could be another argument for the little bounce strategy here. But where would that bounce take you? Take you up here to the 50-period moving average, where I was just simply short again. Again, no hammer at the low. That's the most important element here. Over here, this was the low. This one here, not. Okay, I would not touch this on the long side in any way, shape, or form. But if you are, keep a tight stop. All right, quick glance right here at the long-term chart of gold on 2-year weekly chart. Each one of these candles represents a week worth of trading activity. That means this week right now is not actually finished trading here. I wanted to show you on this particular chart that you have broken major support, and that's a very important element there. You can do all kinds of things in here, set up all kinds of bullish patterns, consolidate, do all kinds of things within an overall downtrend like you have here, as long as you don't break major support. If you break major support, you're indicating something else to the market. Whenever you have like something like this starts to develop and you get this little cup and handle formation, say, okay, there's a little cup and we're forming the handle. And I mentioned back there during that time period, if you close above this downtrending blue line, then you can get involved. Otherwise, leave it alone. And in reality, this never broke to the upside and it fell apart. That happens sometimes. That's why you wait for confirmation signals. In this case, we get it closed well below this strong uptrend line here, and we're closing now below the 200-period moving average, the weekly one. And this is very, very bearish. And again, if we step back, a lot of people have a misconception about gold. They think that it somehow protects them from market crashes and things like that. It doesn't. And in fact, it tracks them. So let me quickly show you a long-term chart on gold so we can look at 2008 time period. Okay, now we're looking at gold, a 7-year chart. Each one of these candles represents a single week of trading activity. You can't really make out a candlestick, that's fine. I'm not trying to show you that. I'm trying to show you instead the fact that gold does trade with the markets lower when there's a major crash. So you have the 2007, 2008 time period where you saw a massive crash and about roughly 50% down to the actual low point in the early 09 time period, or just before the 09 time period. So this is important because you're seeing that they can indicate the same thing that you're seeing indicated by European charts, and that's a breakdown of the uptrend. And then that's important because the only thing not indicating that is, let's see, the S&P 500, the Dow Jones Industrial Average, and Japan. So that's important because these are probably the most manipulated to the upside, the Dow Jones, the S&P, and Japan right now with the Fed. But everything else is indicating that you're breaking down and falling apart because the economic indicators are not supporting these prices, and so we're falling away. What happens when the U.S. continues to move higher while these numbers get further and further apart? If the U.S. can't turn it around by itself, which it can't, and if it's not possible, then what you're really getting is a bubble. You're seeing price go one way, economic activity go another way, and then sooner or later that gap needs to be resolved, and then we get that crash. Okay, so that's why I'm looking at these markets saying, get out. Those of you who'd like to view my long-term charts or my short-term charts updated every single night with my annotations as well as my stop loss limits, so forth and so on, you can go here under the market section, under the nightly market analysis videos. You can watch this video, of course, and then under the below that is the market charts, and you'll see both my short-term and long-term charts with my annotations. And I recommend you check them out daily because I update them sometimes in the middle of the night. So it's important that you guys check them out and stay current. Okay. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer to print. God bless. Take care. See you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.